Good morning and welcome to Rising. We have a great show for you today. I'm Amber Duke, joined at the desk by Niall Stanage.
Great to see you, Amber. Look forward to this every Friday. Always enjoy our conversations.
Such a treat. All right. And meanwhile, on the global stage, the trade war between the United States and China is heating up.
China's Ministry of Finance announced that Beijing will raise its tariffs from 84% to 125% on all US goods.
In a statement, the Ministry of Finance said, given that American goods are no longer marketable in China under the current tariff rates, if the U.S. further raises tariffs on Chinese exports, China will disregard such measures. Chinese President Xi Jinping broke his silence on the tariff war Friday, saying, there are no winners in a trade war, and going against the world will only lead to self-isolation. For over 70 years, China's development has relied on self-reliance and hard work, never on handouts from others, and it is not afraid of any unjust suppression.
China also said that America's tariffs have become a joke, since the numbers are supposedly so excessive that they're meaningless. If the US continues, however, China said it will fight to the end and counterattack. President Trump's tariffs on China currently stand at 145%.
Here's what U.S. Treasury Secretary Scott Bessent had to say Wednesday after China initially raised their tariffs on the U.S. to 84%.
Well, Maria, I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world. And I can tell you that this escalation is a loser for them.
Contrary to Bessent's implication, however, the Chinese Commerce Ministry said that they are open to negotiations with the U.S.
Today, US markets opened slightly higher. The S&P jumped a fifth of a percentage point, the Dow was near the flat line, and the tech-heavy Nasdaq rose by 0.4 of a percentage point. The markets in Asia were a bit of a mixed bag. At the end of Friday, Japan's Nikkei index dropped almost 3%, South Korea's KOSPI dropped 0.5%, and Taiwan's composite index almost rose 3%.
Shark Tank star and investor Kevin O'Leary went viral this week advocating for an even more hardline stance on China. O'Leary said that the tariffs on China should be increased by 400%. Since China doesn't play by the rules, O'Leary says the U.S. should punish them more and force them to the table.
Chief economist and global strategist at Europac, Peter Schiff, warned on X, because China has raised tariffs so high on US goods, the Chinese will now buy those goods from other countries. Since those other countries will now earn more money selling their goods to China, they will have more money to buy Chinese goods, replacing Americans as customers.
President Trump took to Truth Social this morning and wrote, "We are doing really well on our tariff policy. Very exciting for America and the world. It is moving along quickly. DJT."
So I imagine we're going to get off to quite a discordant start here in terms of what we think of these things. I think in broad terms that President Trump has got himself up a cul-de-sac with a pretty disastrous policy and is now trying to back out of it. That is not to defend everything that China does by any stretch of the imagination, but these two countries together comprise about 40% of the global economy. A trade war between the two at this pitch seems fundamentally a bad idea.
I completely disagree. No surprise, I'm
no
sure
surprise,
to you.
no.
Yeah, China is such a bad actor on the global trade markets that I think it's well past time that the U.S. take this problem seriously. Of course, Trump did institute a lower level of tariffs on China during his first term, and those were mostly continued by the Biden administration because they agreed that it was a good idea to start making sure that China is held accountable for the fact that they routinely steal IP, they steal trade secrets from the United States, they artificially inflate their currency, and a whole other host of bad decisions on their part if they want to claim to be free traders, which they're not. And I think you've seen other European countries as well start instituting tariffs on China over the past 5 to 10 years because they similarly recognize that China is not a good trading partner. And outside of the unfairness aspect, the Chinese markets are really not that compelling for businesses. They have had their consumer purchasing power decrease significantly. Their currency is actually deflating, even while they try to artificially inflate it. And so really the only strong part of their economy is their exports. So I think the US has way more leverage here on China than China has on the United States.
So I would respond to that with a couple of points. One, in relation to Chinese exports to this country. If you put on tariffs at the level that Trump is doing, which no European country is doing, then you have about 60 billion a year in mobile phones, about 30 billion a year in toys and games, about 20 billion a year in tariffs and garments that are all basically doubling in price, or the tariff is more than 100% of the price. Now, we then cycle back to the fact that President Trump was elected in part because of inflation and the problems that go with inflation. So these tariffs are likely to drive inflation here in the US. Now, in relation to China as an export market, its population is about 4 times the size of that of the United States, and it is broadly becoming a more prosperous nation than it certainly has been earlier in our lifetimes. And that is why you have lots of people from Apple to car manufacturers across the board wanting to concentrate more on China. The reason that Biden and the first Trump administration put those tariffs in place were the genuine issues, and we were talking about it in the context of TikTok last week, I think, about the Chinese government influence on its industry, whether it's a malevolent player in that way. But there is a persistent problem, I would argue, with the current president, which is the propensity to seek easy solutions in inverted commas for difficult problems, which then blows up in his face. And we have seen that over the past week, where the bond markets were spooking him, the stock market was spooking him, rightly so, given the way that those had been, the bond market had been going in the wrong direction and the stock market had been losing value, and that's why he has reversed most of the tariffs and he's holding on to China, obviously.
Yeah, I do think that the 10% baseline tariff is a much sounder policy than the reciprocal tariffs, which really weren't reciprocal because apparently they weren't going to lower those tariffs in accordance with other countries trying to come to the table and lower them, because in part they included numbers related to the trade deficit and non-tariff related barriers. I think a 10% baseline is much more stable in terms of how the market's going to react, and also gives countries time to actually come to the table and negotiate. But I think what worked out really well, even though I don't buy the White House's idea that this was the plan all along, is that by starting with such an aggressive strategy, we have now seen that the sort of implication that this was going to send our allies running into China's arms turned out not to be true. We had more than 70 countries immediately come to the US with the intention of negotiating those tariffs. And now China is essentially on an island with no one wanting to go to China to negotiate a higher level of trade in lieu of the US being this sort of open air market were both imports and exports, because we previously did not have tariffs. And I think it's important to point out too that part of Trump's approach to this is multi-pronged. It's not just tariffs when you're talking about prices potentially increasing, because he also wants to institute a massive tax cut for Americans, which would give them obviously more purchasing power. He also has been deregulating energy and also trying to increase agriculture in the United States. And of course, food and energy are 2 of the largest drivers of the consumer price index.
I think we're almost out of time, Amber, so just very briefly, what I would say there is that you say multi-pronged. I would say a shifting rationale all the time for this tariff regime, because is he trying to rejuvenate American manufacturing? Is he trying to raise revenue? Is he trying to flex his muscle to get quick deals? Some of those objectives move in different directions, which I think is why there has been so much uncertainty over the past week.
Yeah, I would just one quick sentence to end us off. I would say that that is intentional. So the point of isolating China is to reshore manufacturing in the U.S. in places where we might have a comparative advantage or need it for national security reasons. In other certain industries, like clothing, for example, we would want to move those industries to countries that are friendlier to us.
I shall give you the last word on that.
Thank you.
Coming up, more on Rising. Stay with us.